And hey, good evening everybody. We had a fantastic January. We want to continue through February, and so far for the first 2 days we have been successful. I want to thank everybody who's been eagerly awaiting for the next video launch here, and I thank you all followers on Twitter, StockTwits, Google Plus, and Facebook, as well as the YouTube channel here at Ace 52 Week High. And as you've been following me, and a lot of people are surprised that I've been touting AFFY, AFFY. We'll talk about that later. Exactly how did I find that stock to be a successful hold and play on this one. I've gotten a lot of requests. Should I sell? Should I buy? That's for you guys to determine. The only thing I can do is provide opportunities, and you guys are your sole discretion to buy or sell. All right, you just gotta learn. Just keep coming back to the channel and learn how proprietary information that we have here, exactly how we're succeeding in every single trade, and how we're finding these opportunities. Where's your entry point? Where's your exit point? So that's what we're going to teach you here. All right, it's exciting. All right, so let's start off with the S&P. As you recall, my video a few weeks back that I noted that the 1300 will be the resistance. Okay, we still are at the 1300. I want to just show you exactly how I derived the 1300. This is a cleaned up chart here. Let me go back to the original one here with all the mess over here, so you have to excuse this, but if you want to find out the specifics, go back to my previous video. Alright, so 1300 we had right here. Okay, it still maintains 1330, excuse me. 1330 continues to be the line of resistance right around here. Now let me just show you how I came to how they exactly derived the 1330. So we're taking that point A. Okay, point A, which is right here. This is the double top right here. I'm just going to draw a line, a trend line, from right here, point A. Okay? And I'm going to draw it straight across to the high of May 2011. Okay, that was the high, and ironically, we're still at the same resistance right here. I mean, we've been hitting it. Let me just show it a little closer. See how ironic that right there. This is a 6 month, and beforehand I had the monthly, and that 6 month chart, the 6 month trend line is still butting against it. So we already hit it once, we hit it twice, and sure enough, look at the top candlestick. We hit 1332 on this one at 1333, right on the money. Couldn't time this any perfect. As all my followers had mentioned, if we hit 1330, this is where I will be shorting. So we'll be scalping a few percentage here and there, and I had some put positions triggered, and managed to come out with a fairly great reward. I think the rewards was about 45% to 60%. On return on the puts on the SPYs. Okay, it's an ETF that fairly mimics the S&P 500. Okay, so again, we're still at resistance. We haven't cleared the 1330, 1332 hurdle. Now we have to always improvise where we're gonna go, where we're gonna head next. So you always gotta have a plan, right? So if we pass the 1332, the next line of resistance, I'm just going to expand this out, and I'm going to I'm going to go look at the 5 year. Now bear with me, okay? Avoid all these lines. This is your horizontal line. This is my 1330. This is my top right here. Okay? That's our double top. Now I want to show you exactly why, if we pass 1330, what's our probability of hitting the next target? Where can we hit the next target? Okay? I have right around here, should be about the high of May of 2008. which is also ironically the high of May of 2011, okay, which was 1370. Okay, so if I draw a line, horizontal line right across, you'll see exactly where we've been hitting. So we hit this resistance here. 1, 2, 3, 4, 5. I mean, it comes all the way down here, so it's so apparent. This is the area that we have to take note of. All right, so that 1370. We passed 1332 with conviction, mind you, with conviction. If Israel doesn't come bomb Iran, which Panetta gave away the secret, then we could sure enough head towards 1370. Okay, but 1370, that's where I'll probably take off my bets again, just like I did at 1330, and then I'll reassess the market. Okay, so the next thing I want to show you, since we have our next targets, if we break 1300, the 1330, then we'll probably go higher. But if we don't break 1330, we're going to obviously collapse to this lower line right here that I've drawn, our uptrend. Okay, so right now, as it stands, it would be 1270. But as the day progresses, the variable increases to a higher level. So if you bring this out, it could be potentially the 1280 mark. So I'm going to make it a generalization. As of right now, it's February 2nd. It's at 1270. As the trading period progresses through February, it could potentially be between 1270 to 1285. So again, those are the two marks: 1270 to 1285. If we break below, we don't hold that 1330. But if we break up above 1330, then the next target is going to be 1370. Okay, so we have two sides of the trade. You always have to have an opportunity, a game plan for the upside and a game plan for the downside. So if there's a game plan for the downside, then you know where to go at with the ETFs. You always play the short side, and you always have to take a position on the put side as well with the SPYs. Okay, so let's go reiterate what we talked about on the CDS rates. Like I said, Greek, we're still awaiting the Greek issue resolved. We haven't heard anything. That yesterday they announced it was moments away, seconds away, yet we're several hours away. And again, it's been the same rhetoric past 2-3 months that Greece is going to be bailed, and that they haven't been bailed. So besides Greece, we know it's a done dog. They're going to have a 70% thrashing, not a haircut like all the analysts say on TV. It's not a haircut. 70% is a significant debt reduction. Okay, who's going to be next? I've been saying this for the past month. You guys have been following me on Twitter or StockTwits. I've been saying Portugal, and I've actually talked about this a while back as well on my previous video. This is taken from Bloomberg. I always follow the CDS rates. So right now, this is the 5-year CDS rate, which pretty much states that it's a high risk. Whenever it's above 1,000, the markets are predicting that they're going to default on a rate. Look at this chart. I mean, it was at its all-time high back in when exactly is that? That January 30th of 2012. Okay, it hit about 1581, almost 1600. Then it pulled back significantly. So right now, as we stand, it's at 1320. Okay, let me just show you the euro area. Now, this information's compliments of CNBC.com. They have a great area where it's at the markets, and then you just click on sovereign credit default swaps. It's on the left-hand pane, and you just scroll down, and it has all the European countries as well as the a few Asian countries. As you can see, if you could pinpoint the pigs of Europe, or politically speaking correctly, the GIPS, GIIPS. All right. So let's just use it for this reference, the pigs. Pigs stand for Portugal, which is right here. So you see they're 1467. So it's a little lacking. It's right around here. I think this is about a day old. So it's 1467. Then you got Ireland, which already been bailed out by the IMF and the ECB. They're 585. You see, there's a significant difference over here. Ireland has an economy, has a lot of corporations do business there because of the 2% corporate tax there. Very favorable. Portugal doesn't have much to import, export, or produce. Italy is the second eye in there. Right now they're 394. It's fairly pulled back. I think Spain has to come back to realization, as well as Italy. Italy's already taken the austerity steps. Spain is starting to creep up, and they're starting to switch roles here. Oh, it's a refresh here. Okay. And the last one is Greece. Greece is they have no chance. I mean, it's a 6,300 right now, which signifies that there's a 63% probability. Oh, excuse me. They're borrowing at 63%. For every 10 million borrowed, they have to pay $6.3 million. So that's fairly high for every $10 million. And mind you, this is only for 5 years. And they don't borrow by the millions. We know that. They borrow by billions. And Greece, unfortunately, needs another $180 billion to survive. Or else they're going to have to default and return to the drachma. Alright. And let's continue to the next video, which we'll pause here, and we'll start reviewing the large cap stocks and the small cap stocks. So I'll see you in a little bit.